In Module 4 of this series, we'll explore the important relationship between internal audit and compliance monitoring, and why having both makes your compliance program stronger, more efficient, and better prepared to manage risk. Internal audit brings discipline and structure to your compliance oversight. Audit teams review selected processes and controls to see if they're working as intended. They conduct walkthroughs, assess documentation, and recommend improvements. It's a critical function for accountability and long-term control design. But audit has its limits, and that starts with sampling. Because of time and resource constraints, auditors typically review just a subset of activity. For example, they may look at the top 20 highest value payments in a quarter or sample 50 transactions from a population of 50,000. That approach can leave blind spots, especially for misconduct that's intentionally kept below thresholds or scattered across many low-dollar payments. Compliance monitoring looks at every transaction, not a sample, to ensure that every transaction is subject to forensic analysis for risk. This can easily help you find hidden risks within your organization. This brings us to reviewing basic analytics and deeper patterns. Audit analytics are often simple by necessity. They might focus on top 10 by monetary value for a certain type of vendor, only focusing on 2 dimensions of risk, in this case, value and vendor type. These can be effective for certain risks, but they may not catch more complex patterns in your data. It may be your 50th largest payment in an otherwise low-risk vendor category that is an outlier by amount for that type of payment, and is also paid to an offshore bank account and paid on an emergency basis in 2 days. That's where compliance monitoring adds another layer of analytical rigor. One of the biggest differences between internal audit and compliance monitoring is timing. Audit is typically periodic. It happens quarterly, annually, or during a scheduled review cycle. That's useful for reflection, but it also means you're often finding issues well after the fact. Compliance monitoring, on the other hand, is continuous. It runs in the background every day, scanning your live transaction data. This gives you a real-time lens into your operations, so you're not just learning from the past, you're catching risks as they emerge. Compliance monitoring complements audit by addressing its 3 main shortcomings: its sample-based approach, its use of more basic analytics, and its time lag. Compliance monitoring looks at everything, not just a sample, and applies multiple advanced forensic analytics and AI-driven anomaly detection to each transaction. It continuously scans 100% of enterprise transactions from all business units, jurisdictions, and systems. And it does this in real time, flagging anomalies that audits may not reach for months or at all. Compliance monitoring can also help audit teams work smarter. Auditors can use compliance monitoring risk score data to choose samples for further testing, better select countries or business units for site visits, and even to identify specific third parties for deeper on-site audits. Compliance monitoring can make audits more targeted and more impactful. Audit time and resources are precious, and monitoring helps make the most of them. You don't need to choose between internal audit and compliance monitoring. You need both. Audit helps you understand the past and improve your processes and controls. Compliance monitoring helps you catch problems in the moment and prevent them from spreading. With both in place, you're not just reviewing risk, you're managing it continuously, intelligently, and efficiently. In the next video, we'll explore how compliance monitoring works alongside another essential tool in your compliance program: incident reporting. Thanks for watching.